Good morning, everybody. This is my first LinkedIn Live, so welcome. Today, I'm going to go over the 9 steps to make your business irresistible, an irresistible investment opportunity. And I hope to add some valuable stories in between. So I'll go through the slides. I don't have a ton of slides, and we'll get through this in 30 minutes. So I really, first off, want to thank you all for taking the time to join me. Any questions, comments, whatever, just send it to me, DM me afterwards if there's anything I can help you with. And hopefully I'll make this um, entertaining and valuable for you. Okay, so just to let you guys know, for those of you who don't know me, I luckily was able to sell my business. So started in a garage, grew for 20 years, and sold it for a mid 8-figure exit to private equity. And so that's what I'm going to be sharing. All right, let's just jump into it. I'm going to try to make this fun and jump right into a little bit about me. On the far left, that's a funny photo. That's before we actually had a forklift. So we are unloading our containers by hand. So that was kind of fun. And then just a couple other pictures about me. Bottom right is a picture of the newer warehouse, the latest building that we've been in. We've had 6 or 7 different moves. Sold the business in 2021. I'm not the CEO anymore. Passed off the reins to a great guy that's running it right now. And that's a little bit about me. So into this business. Okay. Um, Selling your business to private equity or another buyer, it's a huge milestone, right? I mean, this could be, you may only do this once in your life. Think about that. And the private equity is doing this every single month. So it's not that they're sharks. Most of the folks that I dealt with were wonderful. I'm talking about all the different private equities that we talked to along the process before we sold, and everybody we've worked with has been wonderful. It's just that this is their business. They're doing this, and for you, it's maybe your only time ever. So it's a huge milestone, but you want to understand that and sort of have that protection. Buyers want the confidence that when they're buying a company, that's the main thing that they're looking at. So they're basically assessing the risk that they're going to have in this purchase. So you think it's risk-free, but they're not. They're looking at many other variables, the strength of your brand and all of these other things that we're going to talk about. Okay. So let's first start with clean, trusted, auditable financials. For a lot of CEOs, this can be sort of an annoying part because you want to focus on sales and marketing. And quick story, I mean, we had no financial system, I would say all the way up until 2018. I mean, we had back-end financial systems, but we wrote all of our own code. Okay, so we didn't have, a one, central kernel, and then we moved over to NetSuite, which was huge. And of course, if someone's coming in to buy you, they want to make sure they can trust what's there and that it can't be manipulated. And so it's really important to have a system that you're working through. I know, even as simple as QuickBooks Online, but there's many other great systems like Acumatica and NetSuite. Of course, it can be a nightmare to do that transition, but I would say the main thing here that you want to think about is who on your team is going to be able to interact with the private equity. Okay, do you have a CFO? Do you have somebody that you can trust that can pull the numbers? And the most thing is they can exude trust to the private equity firm. They're going to do what's called the quality of earnings, which is a very deep dive into your financials. Okay, moving over to customer dependence or independence. Look, it's great growing with Home Depot or Amazon or Costco, but the cons are, as the business owner, you might think, there's no risk in having 80% of your sales with Amazon, but there is. There's always risk when one customer dominates, and typically over 25% with any single customer can be a concern. It doesn't mean that you can't alleviate that concern. It just means that that's sort of going to be, like I said at the beginning, one of those risk factors for private equity. So they're going to evaluating your business. They're saying, what multiple are you going to come in at? And these things can, move the multiple up and down, let's say. So there are things you can do to alleviate this risk, but that's going to take sort of some foresight and some planning, and strategically and purposefully, investing time to expand your customer base and grow with other customers. Okay, achieving above average EBITDA. So a lot of folks don't even know what the average EBITDA is in their industry. It's super important. I mean, is it 10%? Is it 15? Is it 20? But typically it's more than 10 or 10 or more, right? And early story was early on we were well below that because I was growing it and I was looking at tax optimization. I just wanted to grow the top line. And I was speaking with some bankers, and this is back in like 2016. And the banker said, Luke, getting to 10 is really important in your category, and above 10 is even better. And if you're not there, investors are going to look and just wonder about the strength of your brand. And he said it very politely, but that just really was a valuable insight for me and gave me something to shoot for. So that was early on. That was something for a couple of years that I said, okay, here's my target there. And then I had other insights, from different bankers about like what kind of team I needed to build and what type of systems to put in place. But getting to the right EBITDA can be the difference of a higher multiple or lower. I mean, you could be down at 6 if your EBITDA is not, and maybe if it's just at the industry average, and maybe you're 8 if you're, well above it. So it's a huge deal and something to plan for and think about. Okay, the strength of your leadership team. When you go through a deal, again, if you've already done this, you know this, but if you haven't, um, there's a couple different ways you could be bought. Maybe your company is going to be a platform, so it's a bigger. Maybe you have more than 5 million EBITDA, and you're going to be a bigger platform. Or if you're smaller, you might be rolled up into another company. Especially, I mean, either way, your management team is important. But if you're going to be a platform, then the investors know that you may have other ideas after you sell, and they want to make sure your team is strong and that there's leadership at the team, and maybe somebody else who can take the CEO spot, or just that they're buying a company with great systems and leaders that can grow, right? Because they need to grow the business and sell it again. So when you're going through the process, you're going to be doing tons of management meetings. And even when you're doing the initial, say, pitch, when you're running what's called a process, before you're in due diligence, this is like before you found who you're going to work with. Um, the buyers are evaluating you and your team. It could be the difference of them dropping out or them going forward in the deal. So a strong leadership team, and of course, this is something you can plan for. If you think you're a couple years out, you can identify the key positions and work towards those key hires. Okay, documenting key processes. I mean, this is an obvious one, right? You you have to document the key processes, but more important than this is sort of having the infrastructure and the systems in place. So, like I said, for my company early on, we wrote all of our own code. Okay, so we had our own systems; they were super efficient, but uh, I think that can be a problem when a buyer's looking at you. It's your code. They're not sure, who's going to continue to manage the code and what risk is there. In other words, maybe if only one or two people are literally in charge of that code, that definitely could be a risk going forward. So we moved over to NetSuite, and there's a lot of great systems, Acumatica and some Microsoft systems, and plenty of others. But doing that integration, I think, was crucial because it made the company more process driven, and then of course that made it easier for a buyer to say check off that list. Okay, maybe it wasn't a huge plus to the bottom line or to the multiple, but it definitely was something that a buyer can just move on to the next thing that they're concerned about because you're on a trusted system. So here, I'm sure some of you might be on smaller systems and maybe QuickBooks Online and stuff like that. So it's important to sort of evaluate, to make sure that you have you're on a system, and then also to make sure that all of your processes are documented. Now, what I found with documenting processes, we created our own wikis. Okay, so we had an online wiki, and then we would upload the processes, and it was valuable. But I think there was a balance between a little bit of overkill. So there's a balance between, say, documenting too much and going too far into it. So I think the 80-20 rule applies here, definitely, because if someone new is coming in, they need enough information to do the job. And then as the leader of the department, you need enough information to say, okay, this is the right way, the wrong way, or here's the little details that make a big difference on this process. Just think of, ARs or APs, right, in the accounting department. That would be a good example. And then, of course, some customer service. And there's so many tools you can use to document processes. But I would say my learning was don't go overboard because they change. Down the road, they're going to change. You're going to be rewriting them. New people are going to be improving them. So 80/20 it, do a good job, but make it simple enough that it's easy for people to follow it. Okay, so have a budget, a forecast, and a growth plan. Now, I know these things sound a little bit obvious, and my head's sort of in the. I guess it's been blocking the action items here. I know these things sound obvious, but it's amazing. How many clients I'm working with and have talked to that that are not that don't have a planned budget and forecast. So they'll have a forecast, but it's sort of a one-page forecast that they wrote. So I meant, when I'm defining this as having a budget, that means, it's CFO or a finance approved. All your numbers are in there, and it's a true forecast, not just a number you think you're going to hit. And a lot of companies don't have that. It's super valuable. I didn't have it early on. So, I was the main culprit at breaking that rule. But it gives you a great discipline. Now that's super important because it just shows that financial discipline when a buyer comes in. But leading up to the sale, you want that as a CEO anyways, even though it may seem like it's extra cost, extra work, especially for smaller firms. It is worth it though. So you want to get there. So, where can you start? Monthly accounting closes. Are you having accounting closes? Are you reviewing them with finance? And are you getting actionable feedback from your finance team? So start there, then work on like the cash flow forecasts and things like that. But they're all going to be asked for in due diligence. Okay, so just keep that in mind. Okay, legal issues. Look, hopefully you don't have any, but as you grow, you're going to have, little things that come up, and some of it could be sort of on the insurance side. So depending on what you're selling, and any challenges or issues that come from that, you may have some legal issues to resolve. And sometimes you'll think that they're going to be deal stoppers. They're really not. I mean, I would say my main takeaway here, hopefully this is valuable, is to make sure you are really properly insured all the way across, because private equity will make sure. So if you're not, that may lower your revenue forecast as they add in the correct insurance. And for you to protect your investment, you really need to be properly insured here. So make sure you're properly insured. Have a great insurance agent. At first, especially when you're selling a product, it can be really expensive. And for me, I never wanted to, make those extra expenditures. But later on, you can sleep at night. You want to have some sort of recall insurance. That's super important if you're selling a product. And depending who you're selling to, if you're selling to the big retailers, depending which category, they may ask you to have, it's not just 2 million anymore. You may have 5 million, you may have 10 million or more of insurance, depending what product category and who you're selling to. But it's worth it when something happens, and it protects your investment. So these are important things to think about if you're not there, and if you're sort of just winging it and hoping, something doesn't come your way. Hopefully, this is a little bit of a wake up call to think about not just legal issues, but also the insurance side of things. Okay. Working with advisors. So along the way, there's so many things that I can't even explain in this short video that were influential in me being able to sell the company. And so much help I had with advisors that helped me get a bigger valuation. I'll start. Let me just tell you how I thought about it. Luckily, when I started the process and I was working with at least 3 different advisors along the way, the initial feedback I got was choose the attorney first. So choose the attorney before I chose the investment bank. And a lot of times people will go with the investment bank first and then get the attorney. But they're all very important. Your tax professional is important. Your attorney, which is going to be a specific M&A attorney, which you probably don't have. So you're going to go find this attorney, is going to be super important. And then your your investment bank, which is the bank that takes you out and runs the process, is going to be super important. So they're all really, really important, but the attorney is there just to protect you. Literally, that's their job. So you're going to have a very close relationship with your attorney, and choosing a good one and interviewing several before you choose one is important to make sure that your personalities fit and that you have just a couple looks at different people. But my attorney actually helped me negotiate even the M&A commission and that whole structure. Again, this could be your first time doing it, right? So having that attorney, having a great attorney locked in, and then that attorney sort of protecting you and investing in you, and then helping you negotiate all the contracts up front is a huge plus. Now, at the end, when the deal's done and you see the checks going to your attorney and going to your accountant and going to the M&A, it's a lot of money. But at that point, they've done their job, and what those checks are going to be, because everything is negotiated up front, and you're really happy at that point, and you sleep really good. So work with advisors, hire experienced advisors early on, and avoid the common pitfalls. Okay, that most people do, where basically they might wing it, or they want to save 5 or 10,000 here. But trust me, when you're selling your business, there's a lot of money at stake. So that's the last thing you want to be doing. You don't want to you know overspend for non-qualified advisors, but the point is you want to have the best people in your corner, because they will, and they do it all the time, and they meaning private equity, and they're just doing their job, and so you want to make sure you have the right people advising you. And then here I would say the brand story is so important. When due diligence is happening, everything is going to be uncovered at your company. So too often we just think of EBITDA, right? But when a buyer is evaluating companies, they want to make sure there's a competitive advantage. They want to say, because a lot of companies can just get up to a certain EBITDA revenue because they're great marketers, but does that scale? What's going to happen in the next 5 years if there's challenges? Does your company have something special about it, right? And so buyers are evaluating that. And I think the thing you have the most control of is your brand, your brand story. When you're creating products, so if it's a consumer products, that's one thing. If it's a service business, that's another thing. But just to talk about products, uh, not everybody's going to have incredible IP. Not everybody's going to have an incredibly differentiated product that nobody else can create. Usually, you have your designs, your competitors have their designs, and we all want to think our products are special, and a lot of times they are. But the point is, you put a lot into it, and your customer service, and sort of preventing, damages and safety things, and all these things you put into your product. But your competitor's doing that too. So building a great brand, I think, can be an excellent differentiator. That's what we did at Newer. And I'm also launching another thing right now, and it's the same deal. I'm all in on the brand. And if you think about uh, creating a brand, just my take on branding is a feeling that people have about your product. So what you want to do is just get other people to talk about your product, which is easier said than done. Obviously, influencer marketing's been great in recent years. So I'm sure you're all working and building brands, but the one takeaway here would be, how can you get more people to talk about your brands? It could be as simple as, I'm going to put a review program in place. And if you're already doing that, it's as simple as, okay, I'm going to get, I'm going to double the number of influencers that are talking about my product. And you have a certain way of doing that. There's always new platforms. Obviously, TikTok's huge. We really focused on YouTube. I like the long form of people, opening up a refrigerator and showing where they're going to put it and talking about it. So that worked really good for us. We had a dedicated team. Now, when the buyers came in, they completely evaluated our brand. We got really high marks, and it was really cool to see the reports afterwards, by the way. That was a lot of fun just to read how they evaluated it. They have different online resources that they looked at, but they actually ended up calling. They even called all of our retailers. So they call in Home Depot, talking to the buyer, and they had to kind of be careful, like the questions they asked, but they went very, very deep. So that's the type of due diligence you can expect And if you really want to differentiate your company to a buyer, then focus on your brand and your brand story, and start now. And even if you have a great brand, then protect it. It's incredibly valuable. Okay, so sort of wrapping it up, the simple formula for success: go find above average EBITDA. Uh, have a strong brand, get a capable and professional leadership team, and trusted financials. And then, of course, you have to have growing sales. By the way, when you have growing sales, because these processes take a while, um, and I kind of like this graphic that was put together here with all the cogs fitting together. But this is the formula. Um, of course, there's nuance in every one of these items here, but growing sales, you might think about that. The process is going to take you probably a year, start to finish, to sell. And that means you're going to say you want to sell. So then you got to go hire your attorney and interview for them, and then interview for M&A, and then do the same thing with your accountant, or maybe your current accountant can get the job done. And then your M&A bankers are going to take you to market. So they're going to create a book, and that's going to take time. And then they're going to market you, and then you're going to talk to many, many companies, hopefully, who bid. And then you're going to narrow it down. And then finally you'll choose one. And then it's just begun, because then you're going to go to due diligence, right? So think about the reason I'm giving you this story is the whole time you need to be growing. If you're not growing, then the buyer is going to, they're going to look at your historical financials, and they're going to see that you came into the process, and then they're going to kind of see, wait a minute, why are you plateauing? Why are they declining? I mean, that's probably where deals fail. Luckily that didn't happen with us, but yeah, it's a long deal. It could be more than a year, but it's not, the last, say, 4 months, or, that's the heavy lifting. So I don't want to deter you from thinking, this is an arduous process that you don't want to get into and it's too long, but it is a long process. And it helps when your sales are growing. So that's where timing is important. And also there's a little bit of pressure on you, because your time is now going to be focused a little bit on the process. And if you are in charge of sales, that's going to be a challenge. So think about where your time's going now. If you get that center cog going, which is, the capable leadership right here, that's going to help you quite a bit, because you do need to focus on the deal. Now, the other thing I was going to say is, that's my thank you slide. The other thing I was going to say is to all have, a right-hand man or woman have at least one, but maybe two, because you're going to need somebody from finance. I would say is going to be the main person that's going to be helping you do this, but you probably want somebody from sales or marketing as well. Finance is going to interact with during due diligence and pull all of the required information, which is like a ton of tedious information that most founder CEOs are terrible at doing. So you need somebody who can do that. And then you're going to need, somebody that can just balance you on the sales and marketing side, because again, they're going to want to see that competency at the company. And also there's going to be quite a bit of meetings. Okay. And it's great if you're not the only one in the meeting. Now, then you might say to yourself, wait, so how do I share this with my company? DM me. I'll give you some ideas on how to do that. There's ways where you can incentivize your company. You really do want to bring a couple people into the fold when you do the deal. So I can share some strategies that I used personally. Happy to do that with you. So just DM me on that if you have any questions. Listen, I hope this was helpful. This was LinkedIn live event number 1 for me. And I'd love to hear any other things. Maybe I glossed over something or went too fast at the beginning. Just message me. Let me know if there's something that I can help you with afterwards. And if you want to learn more about Apex CEO, just head over to the website. I do free strategy calls. You can message me there. You can also just go to the website and hit the calendar and just schedule one. I'll take a look at your business, listen to your story. I loved, talk to businesses every week, almost every day. And it's really fun for me personally. And I'm just doing this for fun. because after, well, for fun I charge, okay, but for fun, after selling my company, it's something that I really enjoy doing. So thanks again. Take care, everybody.